Hello guys and welcome back to the forexprogram.com YouTube channel. I'm your host Valentine and today we're going to do a new trading tips video, which today I'm going to talk about market analysis and market timing. What you all need to know is that I'm an institutional trader using smart money concepts, and that is going to be a small topic which I'm going to cover in today's video. Okay, so I use smart money concepts since around 3 years. In these 3 years, the most important lesson that I've learned is between premium and discount. I'm going to show you what you can apply to your market analysis, which you definitely can use, and the premium and discount is definitely going to reveal the market sentiment and giving you potential trading opportunities. I'm going to show you some examples in the charts as well. Number two I'm going to touch on is the importance of market timing. I'm going to show you which are the specific sessions. I'm going to talk about which sessions I am trading, and I'm going to give you a couple tips how to really navigate them. Number three is going to be integrating analysis techniques, which is technically the optimal trade entry with the premium and discount. And there is so much more I can really talk about if you want to, but this is the basic concept in my opinion, which you really can use even if you're not trading with smart money concepts. Okay, I'm going to quickly share my screen with you. Okay, so the first thing I want to touch on is the sessions. I got the sessions right here. As you can see, the first one is Sydney session. Let's talk about New York time, which is over here, from 20 p.m. to 1 a.m. in the night. The Tokyo session starts already at 18 p.m. and it's going until 3 in the night. So technically Sydney and Tokyo together are the Asian session, and you can say it's from 18 p.m. to 4 a.m. in the morning for the New York guys. After that we have the London session, which starts at 3 a.m. and it goes until 13 p.m. and after that you have obviously the New York session, which starts at 8 a.m. and it goes until 18 p.m. So you can decide when you're available here. I personally do the most trading during the New York time window. I already done a video on trading tips, how to navigate the economic calendar with the releases, and if you guys know, most of the releases are based on 8:30, which is around here, and you see it's overlapping with London. That means that there is going to be a lot of volatility during these hours, and I really find out that trading New York for me personally is the most profitable session. You can really try everything out, see what fits you best and which session you are trading your best. And it really depends on what you're doing besides trading. If you have a job, you need to make sure to see when you're available to be trading. So you need to fit your schedule into your trading schedule. So just try a little bit, and as you can see, the volume here during the Asian session is very low. It's going to expand when we head into the London session. It's going to have a small dip, and after, or when we are heading into New York session, we are at its peak, which means that there is a lot of volatility. As I said, it's because we have a lot of news based on 8:30 a.m. and after that we have a decrease in volume. Okay, that's it for the trading sessions. I'm going to show you the economic calendar. As you can see here, we're on forexfactory.com. I already showed that in the other video, but just to talk a little bit about that. As you can see, we have most of the news at 8:30. That's the reason why I'm trading there. And I'm looking for a trade to form around this time. Okay, I'm going to show you possible entry that I had yesterday when we are going into the charts. But basically, you can frame your trade setups here. You need to be a little bit careful. Don't place your trades prior to most releases because they are highly volatile and they can cause you to reach your stop loss really fast. So I'm advising you guys to, if you're going to trade around the news, most of the times do it after the news are out. Okay, so the next thing I'm going to show you is the optimal trade entry. I'm going to share my screen. What you can see here is the classic optimal trade entry. So if you have a range high and a range low, this in between you can measure with your Fibonacci retracement. I'm going to show that quickly when we're in the charts. What you can see here is the dollar chart. What I just said to you is that right here is the range discount. Okay, so that is the discount and that is the premium high. What we are going to do now is to take our Fibonacci retracement, put it on the low, take it to the high. What you can see here, these are our optimal trade entry levels. I'm going to make it a little bit bigger. So what we had here was a run on stops. We saw a run on stops, and after that we had a move to the upside. What you can do now is to take your Fibonacci from the low to the high to determine whether it's a premium or a discounted price. When you look at the range here, everything below the 50%, the mean threshold of this range, is classified as discount, and everything above is premium. Technically, what you're going to do is buying discounts and selling premiums. What price is going to do is it trades from premium to discount and from discount to premium, as it's perfectly done here. So what I showed you here is this is the premium range high to the range low. You put on your fib between that to measure out premium, which would be here for a sell opportunity, and this would be the discount. What needs to be there is a higher time frame draw on liquidity, equal lows, for example. That is a little bit deeper into the smart money techniques. I'm going to talk about liquidity later on in that series. Okay, so that is what I already showed you. Okay, that is the fib. You put it on the high to the low to measure out discount and premium. Everything below 50% is discount, everything above is premium. So if you're looking to sell something, you want to sell it in premium prices and buy it in discounted prices. Okay, and price is fractal. So technically what you're going to see on the weekly time frame could also play out on the 1 minute time frame. So there is discount and premium on every time frame, and you need to determine your ranges on every time frame as well. Okay, so what I just said is the range equilibrium, the premium above and the discount below. That is what I showed you on the dollar, range low to range high. Fibonacci retracement, if the higher time frame is bullish, that is going to be the classic ICT optimal trade entry. It's not the magic behind Fibonacci, it is buying discount, buying oversold conditions from an algorithmic perspective. So what that means is that everything below the 50% is an oversold condition in the markets. You don't need to have an indicator for that. You just need to determine the ranges right here. I'm going to get back into the chart. So back to the charts. What you can see here is that dollar higher time frame was clearly bullish from this point on during July 2022 up here. Okay, so we were clearly upside and we were taking out this high, and that is what I just mentioned. Over this high and over this high there is a lot of liquidity resting, because everyone who is going to short in this range right here, let me take this one, everyone who is shorting inside of this range is going to put the stop loss, I'm going to show you, is going to put the stop loss above this high. So technically, let's say you're shorting somewhere here and you're having your position like this, doing it like this, price is going to seek the stops above this high and above this high. That is what we saw with this rally to the upside, because we need this, the positions above the high, we are going to sell into them after we traded to the upside. So the run here was just to target the buy side above these highs and to offset them, because after they are selling, we are giving them the, let's say, the contracts back. Okay, so we are buying back the sell contracts, because for one seller there needs to be one buyer. You know how it goes, and that's the reason why we need to have the liquidity which is resting here and here. And above and below every swing high there is resting liquidity. That is just the way that it goes. And as I said, we ran higher to take out the buy side above these equal highs here. After we ran through them, we're going to offset the positions, and from there we traded lower. And when you see an aggressive run like this with a lot of displacement, you're going to take your Fibonacci retracement out to determine premium and discount. I myself, when I'm taking a trade, I'm just buying in discount conditions and selling in premium conditions, because after I have done that, I saved a lot of stop loss hits, because sometimes price is going to retrace deeper than you thought it would be and you have a stop loss. If you're buying in premium, the chances are a lot higher for your stop loss getting hit, because price is going to retrace a little bit deeper. I'm going to show you what I mean by showcasing a trade that I took. So now we are going to look at GBP US dollar. What you can see here is we ran through the buy side liquidity right here. What is my target? I'm going to target sell side liquidity, which is resting below these swing lows. Okay, we ran aggressively through the buy side just to reverse back down. What do we have here? We expanded lower. Now we are seeing a retracement back above 50%, which I'm going to, what did you guys know? I'm going to sell above 50%. If we go a little bit deeper, let's go to the 1 hour time frame. Okay, so what we had here was the retracement higher back into premium. When you're a little bit more into smart money concepts, this is a busy buy side imbalance, sell side inefficiency, what we have here. Okay, so now let's talk about this specific day, which was on Thursday last week. Let's go a little bit deeper. Now I'm going to use the replay button to put us back on Thursday. Okay, so I'm going to show you this. The white box is the New York session, which I am executing on. It's from 7 a.m. to 12 a.m. That is my execution window. As you guys can see, we saw a lot of expansion there. I'm going to show you the news, and when you look at the news here, I'm going to make sure to have the GBP news as well. So what happened on this day? You see, now we're going to pair up the thing that I talked about with the timing aspect with the market analysis. You know, when we're going back to the daily time frame, what you can see, we ran through the buy side, and now we are looking for a small retracement into premium just to sell off and target a discount. The discount is always the low of the range that you took. That is always a discount, okay? So let's say we're traded here into that H1 busy, and what we've done during London, which was here 3 a.m., we ran through this high, and what we did here is just taking out the stops. Just as I told you guys, people that are shorting this one here, their stops are above that high. Price ran higher, took out the stops and reversed back down. We had the first GBP news at 5:30. Let's look where 5:30 is. It is here, okay? So what did price do? We saw retracement higher. Let's take this one. What can you guys see here? We traded above equilibrium, which is technically premium, just to sell off, okay? If we go further in, the next news were at 8 a.m., which is somewhere around here. What you see is retracement, and we sold off again. On the lower time frame, this retracement is going to be an optimal trade entry as well. So that is what I meant by price is fractal. But as I said, I took this here, and because I saw that GBP had news earlier on 5:30, I took this trade and I sold the premium. I had a 20 pip SL, I remember. Most of the times I'm targeting a 3R, and that was what I was doing here. In hindsight, I definitely could say I could target the low, which brought me to an almost 1-6, but I'm not going to do that. I'm content with a 1-3, which price offered me. And that is what I'm talking about. It was really just the basics of the optimal trade entry, but we ran through the buy side. After that, I was looking for a retracement higher. We had that with our news release at 5:30 for GBP. We retraced back above the equilibrium of the range into a premium. And as I said, you need to sell premiums and buy discounts. Price was selling off sharply just to take out what? More sell side below this low and below this low. This low was the previous day low, and that was Tuesday's low. Okay, I hope you guys understand where I'm coming from with that. We talked about the premium and discount aspect of price. Go back in your charts and see for yourself. Price is fractal, so you can see the same things that I just showed you that was on the 1 hour time frame or the 50-minute time frame playing out on a 1 minute time frame, or even on a daily and a weekly time frame. Because price is fractal, you're going to see retracements, and it's not about the Fibonacci logic, it's about the oversold and overbought logic, which is behind that. That is really all you need to understand. And after the time, I was learning about order blocks, fair value gaps, breakers, inverse fair value gaps, all of that stuff. I know all of it, and after the years doing it, I really focused more on subtracting from my trading plan, which I'm now focused on really buying discounts and shorting premiums. That's really all you need. And go back in your charts, backtest it and see for yourself, and let me know down in the comments what you can do with this valuable information. I hope you all took some great notes, and we're going to see us in the next trading tips section. Happy trading, guys.